What a weekend. We got a lot to talk about. We're going to cover quite a few things here as we get the streaming going here. Going across. Looks like we're live. Facebook. What's going on, guys? Facebook is up. YouTube is up. And it also looks like my last one is up here. Excellent. We are live. Facebook, YouTube, and LinkedIn all going live at the same time, right? And then we also have everything set up as far as the platform is concerned. So you guys are watching the streaming as we cover some great topics here today. As you guys can see, the main title talking about Feds raising interest rates to 20%. We're going to get into that capturing title in a second. There's quite a few things that I want to cover. First, I want to thank you guys for checking in. Justin R. Harris here. You know, we cover all the different types of investment points as far as the market is concerned, my specialty when it comes to commercial and residential real estate. Also, I'm hiring. I'm actually looking for more commercial agents because I have a sick platform that I'm putting together that's going to help you guys make a lot more money. You got to come into my office and check it out and see what we're talking about. But that's not what this video is about. Also, I want to thank you guys over on YouTube as well. You guys already know, we're building that platform up more. I have quite a bit of, I'm not quite sure how the whole LinkedIn system is set up, but I know there's quite a few people on there. It's kind of tricky. You know, you have a lot of business professionals that understand the market and so forth. So I don't want to waste too much time when it comes to getting right into it. The things that we're going to cover today. All right, so I got my checklist because we got quite a bit. We're definitely going to talk about just exactly what the title says. We're going to talk about the Feds and 20% interest rates and where I get that from. I know you're curious. We're also going to talk about their plan as far as what that actually means. Also, how that affects you. We're going to get into a few stats with that. We're going to talk about what to invest in this economy. Listen, the saying is when there's blood in the water, I promise you there's blood in the water. You just got to know what to focus on. So I'm going to explain that to you guys so where you know where to put your money, because a lot of people are just running scared right now, tucking their purse. And I got to tell you, listen, this is game time right now and it's only going to get better. And I'm going to tell you why. Then I have a report from NAR, National Association of Realtors, all right, and what they're talking about with the home market right now. And then I'm going to give you a few updates with Redfin. Redfin has some critical information that kind of follows up from what NAR was talking about. We all know they're pretty on top of it when it comes to the entire housing market. But without further delay, what is he talking about with the whole 20% thing? So what I wanted to cover was essentially a history lesson. In 1979 and 1980, we had the biggest issue when it came to inflation and unemployment. Okay, so it was at that time, going from 1979 into 1980, that the Fed Reserve had to jump in and hike rates up to 20%. 20%. Now, if you compare that to where we are right now, right now we're up and it's only, where are we? We're at 8.6 inflation right now. Back then, the inflation was 11%, right? So they saw that we needed to jump the interest rates up to 20%, an astronomical number, okay? But by doing so, and at that time, just so you guys can put things together, inflation was at 11%, unemployment was at 10%, okay? So it was crazy numbers back then. What was the result of them doing that? The economy shrank by about 7.9%, okay? And that was right around the end of the second quarter, okay? Now, this is all historical information. I actually researched, I watched a few videos where a few YouTubers, Clear Value Tax, those guys are great with some of the facts that they did. And then I did some digging on some due diligence on my own to confirm a lot of that information because I found it quite useful. Right. So then we talk about the fact that, okay, what happened? 20% is such a big jump. What are we doing? Right. So 2 years later, inflation finally comes down to 5% and unemployment dropped down to 8%. So we were at 11. 2 years brought it down to 5. You're talking about a 6% drop, right? It took 2 years for that to happen. Now, at what point and where in that 2 years did it happen? I don't know. I can't answer that for you. We'd have to go back and do some graph searches there. But then 6 years later, so from 1980 to 1986, inflation dropped another 2%. It dropped, another 3% down to 2%. 6 years later from 1980. So let's keep track here. Inflation was at 11% in 1980. 6 years later, it came down to 2%. 6 years. So right now, we're at 8.6. Let's put this together. Now, the Fed Reserve's plan is to come down to 2. So they're doing what's called quantitative tightening to get that to happening, which is why the interest rates are up. Now, everyone's complaining, well, okay, last month in June, they said, oh, we're going to do it. They had their meeting and it was rumored that it was going to be 0.5 and it went 0.75, right? July 28th coming up, it's going up again. Rumor is 0.5, 0.75. However, I can promise you it is going to be a much more stringent hike. It is coming up a lot harder than 0.75 because the second quarter reports have already come out. They're already kind of arguing amongst themselves. There's 12 branches, if you will, that are composed of the Federal Reserve. So Atlanta is already, their location is already arguing that, hey, we are in a recession. 2 quarters have already shown that we're in a deficit. But that final report will come out, I believe. I think that's at the end of the month as well. I know the 15th is our next CPI report. So we're going to find out. You're going to hear some froggy things coming out. But look at that. It took 6 years from 1980 to 1986 to get down to 2%. That's my point. So we're at 8.6 right now. And the Federal Reserve's goal is to get down to 2. And it says that in there. And they said, listen, we believe that our economy is robust enough that we can make that happen. Now, as much as I won't disagree that we are not a robust economy, we are resilient. However, times are hard. They are not concerned with whether or not you lose your job or someone loses their house or a business goes bankrupt. That is not going to hit the brakes on what they're doing. That is not their job. Their job is inflation and keeping the dollar strong, and that's all they're going to focus on. But let's put it together for a second. Back then, the national debt was $908 billion in 1980. So if we were at $908 billion in 1980 and we were at 11% inflation, we're at 31 trillion. It's such a profound number. National debt today. It's projected that we'll be at about 33 by the end of this year. 33 trillion. Okay, with an 8.6 inflation. You think it's going to be less than 6 years for us to get down to 2%? I don't care how aggressive they want to get, but 2% is not a realistic number. It's not going to happen. We'll probably get closer to about 4, 5. I would say if we see the window of 6% starting to peak around the corner, if we do actually get to 6% inflation, it's going to be an amazing thing. It's going to be an amazing feat. I promise you that. Okay. So pay attention to what's happening with that, because how this affects everyone, you're going to see home buying, it's going to slow down. Sellers are going to lose their minds because it's already proven. And I'm going to read those facts to you guys later. But as far as home prices are concerned, if you're waiting because you're trying to figure out what to do, I can tell you right now, what you need to do is just pay attention, because the prices are going to come down. Now, rates are also going to go up, so it's all relative, okay? So what does that mean? Well, if I told you it took 6 years for inflation to get to where it is, maybe when you apply for a loan, as much as I don't even want to say this, maybe that adjustable rate mortgage is right for you. You have the 5-to-1 adjustable rate mortgage loan, the ARM, right? But you tell them 5 years, and I believe that the rates can come down. And at that point, the rates kick in at what the current market is. So you think we'll be as high? Because I can tell you right now, we're probably going to be kicking in some really, really astronomical mortgage rates. I'm not going to give you guys figures on that because I don't want to be held to that, nor am I in a financial position as far as analysis is concerned to give you guys that kind of data. My specialty is in investments in real estate and commercial. But when it comes to the economy and home facts like that, I have to keep you guys abreast. So definitely pay attention to that, because that's probably going to be the best time to get those types of deals. Do not do a fixed. You're screwed if you do a fixed, because you're going to be holding on to that number. You're going to be paying astronomical numbers monthly, trying to figure out when you can get your head back above water. So finding deals is going to work for you, but I promise you this is going to be the time to buy all the way through Christmas. Buy, 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 buy. And if you can't buy real estate, buy ETFs. Buy the companies in the market that are buying the real estate and get your dollars up there. Focus on the dividends, okay? Buy the dividends that pay out quarterly or even monthly if you can, if you need to see a return that's coming in sooner, okay? Start to prepare yourself for those types of things, because those are going to be a fire sale as well. You're going to see a dividend fire sale. So jump in and grab the right deals when it comes to that, right? The Federal Reserve, their primary concern, like I told you, is not focused on businesses that are going bankrupt and things like that. They could care less. Okay, so if you're underwater with your company and things like that, they're going to watch you drown. You're going to drown hard. No one's throwing you a vest. Okay, so, and they don't care that the unemployment is going to rise right now. That's not the primary focus when it comes to that. So the media, they're going to twist things. They're going to put things out there. It's going to blow your mind. You're like, what in the world is going on? And I can tell you right now, guys, that's not what they're all about. So I gave you guys those notes when it came to that, as far as what to focus on, what I meant by the 20%. Looking at it historically, everyone seems to just stop at the data of 2007 to 2010, which is when that whole swing started to happen. And honestly, it was back to 2004 and 5 when those ridiculous ninja loans and the people getting, it was like D-rated loan packages getting sold from one bank to the other, and they were just buying bad debt and selling bad debt. That was the bank's fault back then. Comparing that to now is a complete misanalysis. You need to go back to where the times were remotely similar. That is about 1980, because that's when, if you look historically, the fuel was a big issue then. Iran was going through their issues with the fuel and raising prices and so forth and trying to capitalize on that. And then you had all of that happening over there in the Gulf. And so, and obviously that then led up to the Gulf War in 90, right? So you have to pay attention to those types of things, because that is more relative to what's happening. Because right now, obviously what triggered a lot of us pouring ridiculous amount of money in and creating the inflated dollar was the pandemic initially. Right? We were already seeing a financial crisis before that, and no one was really talking about it. But if you look back, as we locked the doors and set up curfews and shut down the world in March, right? However, in January, that first quarter and the last quarter in 2019 in December, it wasn't looking pretty for the market. And a lot of people weren't paying attention to that, but it was like, kind of just like a glaze over what was actually going on, right? So it's crazy, because now if you pay attention, you look back and you reflect, you do a little Monday morning quarterbacking, and you see exactly what was going on. So I just wanted to pour that knowledge at you guys. And then, I had to pull some stats and some information from NR, but this is the positive side. So I told you, this is the time to buy, right? Because according to National Association of Realtors, as of July 7th, it says home buying is 5% cheaper than a week ago. 1 week. So if in June 15th, they slapped everybody with that 0.75 spike, and the reports came back that in July, and this is data that is reporting after the fact. So that means the last week and a half after they raised those numbers, you could see that there was already a change in the sellers actually having an epiphany and saying, hey, you know what? Maybe, just maybe, I need to come down in my asking price, because I am not reasonable right now. Yes, sellers, come down. If your goal is to sell and you're trying to move on in life, then let's get a little more realistic. Let's get your property sold, okay? Let's get numbers that are going to get people in the door, because what you're asking for is not what the majority is even going to get qualified for. They're not going to get qualified for that loan. So what are you doing? Right? Then we jump over to Redfin because I don't want to keep you guys too long. I hate when these videos are long, but I love this. Leading indicators of home buying activity. It says for the week ending July 7th, 30-year mortgage rates fell 5.3%, the largest one-week drop since 2008. This was down from 2022, a high of 5.8%, but up from 3.11% at the start of the year. It says fewer people online have searched for homes for sale on Google. Look at this information. People are just stopping. They're like, you know what? I don't even qualify. I can't get this loan. There's no way. It's $1,000. It's $1,600 more than what I would have paid 6 months ago for a loan. Whoa, I'm not doing this, right? So these people are backing off. It says the searches from the week ending in July 2nd were down 2% from a year earlier. 2% is huge when you look at the amount of traffic that is on Google. So if you look at the Google traffic and you multiply that times 2%, you're like, oh my God, it's millions of people, right? It says the seasonally adjusted Redfin Home Buyer Demand Index, a measure of requests for home tours and other home buying services from Redfin agents, was down 15%. So Redfin has their own entity that they use and their agents and so forth, and those searches have dropped astronomically. 15% is a lot, okay? And it says mortgage purchase applications were down 17% from a year earlier during the week ending in July, while the seasonally adjusted index was down 4% week over week. Key housing takeaways for 400 plus U.S. metro areas. Unless otherwise noted, the data in this report covers a 4-week. So what they're saying is they're going on a 4-week data push from 2012, and they break down some really key information here. I really suggest you guys go over to Redfin and check it out. I'm not going to bore you to death with that, but I definitely wanted to drop this information on you guys so you guys can be abreast of what's going on and understand how or when to invest. That's really it, guys. I really appreciate you checking in. That's all I got for you. Once a week, I drop this video. My other videos are the business analytics, where we go into solving business scenarios. If you go onto my playlist over on YouTube, go ahead and like and subscribe on there. If you can, jump in. I also drop those links. I go live. I don't do it on Facebook, but I do continuously go live on LinkedIn and on YouTube for those people that are interested in that. On the LinkedIn platform, I do have that I'm hiring out of my office commercial agents. If you are a commercial agent and you know what you're doing, what I have is a residual income system platform and ridiculous commission rates to get you paid a lot better and set you up a lot stronger, and even in this economy. And I have more. It's like if you act now, message me. We'll talk about it. Thank you guys once again. I'll see you later. Enjoy.